So interesting enough, over the pandemic, that trend accelerated because a lot of people were hanging on and staying in the labor force, right? Because they didn't have enough money to retire. Pandemic came along and a lot of people just left the labor force. So what does it mean? So there's a lot of talk of inflation and growth, but the trend rate of growth is likely to be going down because, and we won't know for a year or two until the stimulus comes out and the economy settles. But the reality is the highest earners have now stopped earning and they've left the labor force. So now they're left with their savings. A lot of them will switch to bonds. And so they've got their final amount of money, or they become more risk averse because God forbid you get a 50% market crash and lose half your wealth on retirement. So therefore, what's weird is also people are living longer. Well, actually not in America, bizarrely enough, but everywhere else in the world, people are living longer. So they're trying to calculate this pool of money, is it enough? So I'm seeing my mother going through this calculation right now. She's 78 years old and she doesn't know if it's going to be enough. Now, luckily, I can backstop her. But others don't know that equation. And the fear is, imagine being 80 and running out of money and living for another 7 years. That's the terror of imagine if I become destitute. So what it creates is a behavior that people tend to spend a lot less than they would have done. So I think that the baby boomers en masse will spend less than they would have done. So we'll wait and see how it plays out, but that's my best guess. When you look at the labor force participation rate, which is basically the same thing, and it's all in that video, and I showed in that video too, that the Fed balance sheet follows it. And I can project forward, because it's demographics, the labor force participation rate, and it shows that the Fed balance sheet keeps going because they're trying to fill the growth gap as these people come out of the economy, because you've got this big problem of debt, not enough growth to service that debt equals Federal Reserve plus taxes. It's a complicated soup that just generally means, and we've seen it in Japan, that trend rate of growth is lower than we ever imagined. I've spent a lot of time speaking to asset allocators, corporate pension plans, fund managers of all types, and RAAs, registered investment advisors, about this. So it is on their radar screen. They're just slow to move. Now, that piece I kind of said to individuals, you can do this too. And, you were one of the people who did that. You just retired and you thought, well, okay, do I have enough savings to live off for the rest of my life? Probably not. What do I do? And I said, listen, this might be the answer. And I think hopefully some people have started to realize now that it is an answer, and it's a very meaningful answer. And it not only is it an asset class with hope, it's an asset class with upside, big upside, potential upside, 100x from here. So it doesn't really matter how early or late you are. And it fits into traditional portfolio asset allocation models. That means it's not a stupid investment for those pension plans and others. So I think it just over time, if we look at the adoption of the Bitcoin network and crypto network overall, the internet was growing at 63% a year from 1990 to 2000. Right now, and that in 1997, the internet had 140 million users, which is exactly where we are with crypto right now. Crypto is currently growing at 113%. So the internet was the fastest adoption of any technology in all recorded human history. Right. Crypto is twice the speed of adoption of the fastest ever recorded technology in all human history. We get to 1 billion people by 2024. That's exponentiality, my friend. We can't get our heads around how does 140 equal that, but that's what it does. I think by 3 years we'll have broken the back of it, meaning the tide will have moved. Now we've seen the early adopters, that's clear. We're all celebrating those victories, but then it's just going to become regular that we hear this. So we'll have broken the back of the momentum, and by about 5 years, 5-6 years, it'll be expected, and you'll have to be answering to your trustees or your board why you've not use crypto. So that whole narrative will change because the regulators will have approved it. The central bank digital currencies will be in place. Crypto as an asset class will probably be worth 20 trillion or 30 trillion, whatever the number is, right? Then you've got no answer. The regulators have said, yes, here's your restrictions and how you can use it. And therefore people have to. So I've always said it's like being short a call option, i.e. the more it goes up, the more you have to buy it.
It's like you were saying, as its volatility begins to go down, as the saturation or more dollars come into the market and kind of rough out those volatility edges, now, I could see it expanding, right?
Yes, and what makes it pristine is that you can't mess around with it, right?
You can't make more of it.
Collateral. Exactly. You can't print more of it. Right, US bonds... In a recession, you actually get penalized for your collateral.
Yeah.
Because I've got US bonds, they're my best collateral. I give them to you because you want to borrow them. And what happens is the Federal Reserve makes a load more of them and the price goes up, sure, because we're in the middle of a recession and you need the bonds. But my future gains have gone because yields have collapsed. So I'm like, okay, well, what was the point of owning that collateral in the end? Because I'm not getting any increased yield because the Federal Reserve dropped yields to zero. Now with Bitcoin, it's probably going to work the opposite. Because if you want my Bitcoin, you're going to have to pay me for it because nobody can change the rate of interest on it in a recession by making more of it.
There could actually be a return to, I'll use this word generally, savings.
Yes, correct.
My grandmother lived a very wonderful life all the way to 103 years old on the back of bonds.
Yes.
She had no appetite for risk and she lived great on her coupons.
Yep.
Wow.
Exactly. And we can go back to that world in crypto. We're seeing it with DeFi and we'll see it with Bitcoin over time that, you can choose your risk much like you can in credit markets. I can take a junk bond and get more yield, or I can get US Treasury and get less yield. It'll be the same. It'll be Bitcoin will give you the lowest yield and some of the junkier stuff, the more speculative assets will give you higher yields. And then what happens is there'll be periods of times in a crisis where nobody wants to have that collateral, which is the more speculative stuff, and people want Bitcoin, and Bitcoin's yield will probably rise in a recession, which is the opposite of what happens now.
I want to ask you, how does that change? How does this change your thinking of it when the denominator is not people, but instead the dollars that they bring to the network?
The answer is I don't know. Okay. So, but the truthful answer is it's not just the number of users. There's another thing, is how many connections between the users. So Doge has a number of users, a big number, but there's not many use cases for those users yet. Yes, you can spend it at Dallas Mavs games and maybe Elon will do something and maybe he'll build a use case for it, in which case the network will have value. Right now, it just has speculative value, and that's okay. Ethereum has enormous value because it's growing faster than anything else. It has an enormous number of users. There's all of the applications being built on it and all the developers. So it's like the perfect Metcalfe's law model right now is the Ethereum. So Ethereum is the sweet spot. There'll be other protocols that are less big, less well known earlier in that cycle, and we don't know where they're going to get to, but we can assume we can extrapolate. So that's how I think of it. Don't think of the dollars. Don't think of the investments. It's the head check is, do a lot of people invest in it? Do they want to be part of the network? And can they do stuff on that network? Bitcoin is building out its use case to deepen its, above store of value. The Lightning Network is one of the key things. And, they're trying to develop more smart contracts and stuff. Does that take off? We don't know, because it has its own perfect use case anyway. But, we'll see this with, whether it's in XRP or whether it's in Polkadot or whether it's in a bunch of these, Cardano, we don't know yet. Some of them are early, some of them are later. I mean, XRP is later and has more adoption, but people aren't yet convinced of the adoption. So that's okay, but we know what to track. So we can be kind of agnostic and have a way of valuing this stuff, that we don't have to be tribal about it and praying for our network to win. We can actually say, look, my job here is to make money. And what I want to do, I can have the philosophical thing about crypto and everything else, but if I want to make some money, I'm looking at this basic set of metrics. And then I can stop listening to all the noise, because it drives you mad, as you know. It's hard.
Oh, absolutely. I've been fortunate that I've never really been a maximalist about anything. I mean, when I first came to the space, the narrative around XRP was extremely attractive to me. I had some real world exposure to the value that it would bring if I had it back then. And so it just made sense. But as I've gone deeper and deeper into the space and understood that I really don't know what the future is going to bring, anything could. Like if you would have told me in 1995 that there'll be something built on the internet that I'll press and a stranger will show up and take me anywhere I want, I'd say, my mom told me never get in a car with a stranger. Right? I would never have foreseen that coming. Yet I use Uber almost every day down here. So the world changes, things changes. I don't know what's going to be built. But I think the answer for me, I built my portfolio around a foundation of smart contract platforms because I believe that will be where an app is built that reaches billions of people. Will be on one of these Cardanos or Ethereums or Polkadots or Algorands or whoever. So I've got a nice basket of all those things, and I'm perfectly happy just sitting back and letting all that massive human capital that's come into the space go to work, and the finance guys like you come in and say, hey, there's alpha here. Let's bring on our alpha hats, throw in some capital and get some alpha, right? So totally happy.
Yeah, and I mean, that's the approach I have. I mean, I have a basket because I don't know. Yes, I know Ethereum and I've got a bigger weight to it, but other stuff I don't know. And I'm intellectually honest with myself that I don't know, but I'm quite interested in all of these protocols, and let's let the magic of the markets play out, because most of them aren't going to go to zero, but maybe some of them dramatically underperform. But there's going to be a bunch of these that are going to really, really, really outperform, and it will easily outweigh the ones that have underperformed.